All right, good morning, guys. Morning, everyone. We're gonna get started here in just a couple minutes. We'll let a few other people join up, and then we'll go through the carnage of the week. Guys, let me know if you can hear me okay, and we'll just let people join up, and I'll just get started here relatively soon. I've just been kind of scanning through some charts this morning, and thought I'd do a live stream. Obviously, we had a big week. I was looking back at some of the videos that I put out in the last week or so, and you know, the titles, I don't know, I just whip the titles out, those thumbnails, but sometimes I try to include some sort of context in the title of what the video is going to be about. And I put like a big drop coming and things like that, and that's just because I saw downside happening, you know. And the market's extremely over leveraged. I mean, if you just look up like the margin debt, I mean, the setup is there for a big drop, and then I saw the technicals setting up and playing out, so it made sense that we were going to get a big drop. So I put that out. But then you know, sometimes if there's just not much to add, or if it's just kind of a flat day, or if it's just I've got trade ideas that I just want to point out, and it's not really a general market analysis day, I'll just put market analysis on the thumbnail. But again, you know, I did look back at a video where I put that I thought the top was in, and it was on December 3rd, which wasn't the all-time exact top. Again, you know, if this is going to be the top of this market, then, you know, we could look back 2 years from now, and I could point to when I put that video out, and it'll pretty much seem like the top. I mean, for anybody that rode the market down, it would definitely be the top. And for anybody who shorted it down, you know, all those gains, it would definitely be the top. So, you know, never going to call the top the exact day, but I think we're in the area. You know, I'm seeing certain signs. Again, the Fed is coming out. This market, I'm a firm believer that this market is pretty much all about the Fed. It's not earnings. It's literally nothing. Because the reason why, and I'll show you guys as I start to get into some of these charts. All right, I started this channel in 2018, and when I go to this weekly chart here, you know, this is 2009. Back here, I was just starting to get in. I had been an investor in stocks back in like 1999, but I wasn't really trading. I didn't know any technical analysis, and I didn't really have a whole lot of money back here. So this correction back here, wasn't really involved in for the most part. But I was able to, you know, learn over the last 10 years or so, you know, and evaluate and learn and back test strategies, and the strategy that I teach on this channel and that I teach in my course is a strategy that I've found to work. All right, it doesn't work on a dime. It doesn't work the minute that I say, okay, take a trade, it now works for you. But you know, if as long as you follow the technicals and you know how to read the charts, then it can work for you, and you manage your risk properly. So here's the bull market of starting in 2009 in the SPY. And I had this trend line marked out for quite a while. We were watching it. It kept hitting support. Now in 2018, we broke trend. And I thought, okay, this is probably the start of of the bear market. You know, we've been in a bull market since 2009 or 8, you know, and that's about consistent with the term and time length of the bull markets that we've seen in the last 20 years. We broke the bull market trend, and so I was looking for a bear market. So I was short right there. You know, I was shorted this, caught this big drop, but then the Fed came out and on Christmas Eve and completely flipped their position. So if you guys remember, And if you haven't been trading that long, then maybe you don't. But again, you've got to take all this information in, because it gives us foresight into what is going to happen in the future. So the Fed was hiking rates here. They started hiking rates, and Jerome Powell took the Fed chair, and he said, "I'm going to hike rates. It's on autopilot. Everything's good." The market said, "No, you're not, because we can't continue to go up without cheap and easy money." So it started to crash, and he did a 180 and flipped and said, "Okay, I'm going to not hike rates, and actually we're going to cut rates." So then they came out with this BS thing. I remember back then they were saying, so they started this repo, the repo market. I don't understand the repo market completely, but let's just look at it as a liquidity. It's a way for the Fed to give the market stimulus. Let's just put it that way. And the Fed came out with that repo thing saying that, oh, there was a tax, there was like end of the quarter tax issue where they needed to help out with that. It was some BS thing. That's the thing. The Fed, for the most part, is BS. I mean, in my opinion. But that's what they came out with, and they started cutting rates and started pumping stimulus, and they said, oh, this is not QE, but it is stimulus. That's how they said it. It was QE. I mean, they were literally just buying bonds, maybe different duration bonds, but they were buying bonds, doing QE, and cutting rates. All right, so the Fed created this. All right, earnings weren't rising during this period. This was the Fed. Okay, and then what we did is we back tested that trend line right there, and I said, okay, then I'm going to short right up here, and this is where I got short right up here. I said I'm going to short right into the major resistance line. We had the negative divergence. You can see it right here on the weekly chart. See that on the RSI, and it was there on the PPO slightly. If you go to the daily and stuff, it was showing up. And so I said, okay, this is the area to short. We'll short with negative divergence on a backtest of major resistance. And sure enough, then boom, it was COVID was the issue now, but technically it was completely a setup, for a short trade. Regardless of what the catalyst was, which was COVID, the setup was there. And this thing completely crashed. I covered my shorts down here at the bottom, and I actually flipped long. And I told everyone I'm starting to get long. Now, yes, I rode I was long. I started to get out of my longs right about here. And I'm just, being real with everyone. I'm not going to call everything right. So, I seem to get the short trades right. I definitely, seem to spot those. The long trades, when I see them, I usually don't stick with them, especially given my kind of longer term view. And this is what I'm trying to explain. So then this rally came, and we caught some trades in here, and I caught some long trades. I was long gold miners. On the COVID drop here, I added to my gold mining position and rode the miners up for huge gains there. So I was right on that. I just wasn't right on the general market. But the point is, now, where did this rally come from? We were in a pandemic. Everything was shut down. The rally came from stimulus, fiscal and monetary stimulus, right? So now they're saying, oh, GDP's great. And well, GDP's great because 70% of GDP is consumer spending. Where did the spending come from? Well, the money came from printing money and stimulus, all right? And it's working its way into the economy. There's also stimulus to the stock market and real estate. A lot of baby boomers who own a ton of stocks, and millennials, but a lot of baby boomers who own a lot of stocks, and they're sitting on a lot of gains. Well, they're buying RVs, and they're buying houses, and they're spending that money. They're retiring early, and they're spending that money. So that's stimulus. That is that's money that's come from the Fed, basically pumping the markets up, and now that's getting spent. So that's the point is that's caused inflation. Okay, so now we've rallied all the way up here, and we broke that trend line again. Look at that weekly sell signal right there. Okay, this was, the Fed managed to pump us all the way up here, but we now have a break of that trend line on the weekly chart. That tells me that, we've likely seen the top of this market. I don't, unless the Fed comes out next week and does a 180, and they're going to have to do a complete 180. They will have to shock the market, because right now they've said they're going to hike interest rates, 4 times, I think is what they're saying. So 4 probably quarter point hikes, maybe a 0.5% hike in March, but 4 percentage hikes, and then they're going to actually reduce their balance sheet. What I think the Fed's doing, this is just my take on it. I think the Fed was trying to come out extra hawkish in their last meeting with the talking about reducing their balance sheet. I don't think they have any intent on reducing their balance sheet, at least not initially. I think they're literally were trying to spook the market to get the market to do this so that in this meeting they can come out and walk that back a little bit. Okay, I still think they're going to hike rates. I don't see any change in that. This Fed's, so that's why I still think the top is in, most likely in the market. And I want to talk about that in a little more detail, but I think they're going to walk back the balance sheet reduction to ease off some of the selling pressure, okay? Because here's the thing. They don't want the market to crash, all right? They don't want the market to have another week like this where we're just completely crashing and all of a sudden things break when markets crash. You've got institutions that are levered up, pension funds that are levered up, and they need time to de-lever. So if the Fed wants to take inflation off and start fighting inflation, but they want to do it without the markets crashing, they want to walk the markets down. So I think what they're going to do, and this is just a guess, but I think they're going to walk it back on the balance sheet reduction. They're still going to talk about the rate hikes, but they're going to say, well, but we're not going to reduce the balance sheet, or, we're still talking and thinking about that. He'll walk it back in the press conference. Just, that's my, I'm speculating, but that's my, I'm guessing on that one. I think that's what they're going to say. So what that's going to do is cause the markets to say, okay, we can take a breather. We don't need to completely panic sell. We can maybe rally a little bit. So again, if we're going to start a bear market or just a correction, again, maybe that's all we're going to have is a correction. We're going to rally. We're going to have some sort of a rally. We're not going to just completely correct down there. So, and then maybe we're going to come down some more. If it's a bear market, we're going to likely just do this. We're going to crash, kind of rally, crash, rally, work our way lower like that. And then eventually things will start to get pretty bad, and then we'll kind of end the crash. And it might not be here. It's probably a lot lower, guys. But I'm just saying bear markets don't just crash, all right? They work their way down. They fall the slope of hope. So right now we've fallen off this cliff. We need some hope, right? You're gonna rally, and then you're gonna come down. It's called catch a falling knife. All right. That's why I'm telling everyone right now until the charts change. It's sell the rip. If you're a follower of my channel, we're gonna look for rips to short into, and I'll give you an example of that on Friday. All right. So I covered some of my shorts on Friday, but I was looking to cycle back in. Qualcomm gave me that perfect opportunity. Let me flip to the daily here. Maybe I got to go to the hourly to show this. Yeah, the hourly. Okay, so there it is, right? Let's see that. Yeah, here it is. So we gapped down, and I said, okay, we're pretty much at support at certain stocks, not at Qualcomm, but I was looking for a rally, and sure enough, rallied right into that resistance level. This is the level that I've had marked out. If you look at the daily here on Qualcomm, that's the level where I'm like, okay, when we break this, we're most likely going a lot lower. And you can see what it did. It rallied right up, tagged that as resistance. I reshorted it right there. So I covered right up to there. I'm like, oh, you guys are giving me a perfect entry. I'll take it. So when the market gives you those perfect entries, right now it's sell the rip. So if you're watching for that, you'll see it rally into those resistance levels, and that's where you take your shot, so that's where I reshorted Qualcomm and then, sold off. So in general, that was, a good trade. I mean, because it sold off like about 4% from that, and then I covered it here. So, pretty much caught the gains on the gap down and then added to it. All right, so I'm still short on that one. I don't see any reason to not be short. We got this gap to fill, so that's just a very likely probable target with the markets breaking down. But I could see us rally. I think some stocks are going to sell off, and some are going to rally. So I could see the SPY having a little bit of a bid. The Qs, all right, Qs ended the day at support. So I think it made sense to take some profit. You know, we could gap down on Monday, but we could also gap up. I think we're going to gap up, to be honest. Probably going to get some sort of a impulsive rally, but you know, who knows? I still have some short positions I can add back. You know, as we're trading this, when the probability starts to decrease, you want to lighten your position sizing, and when the probability increases, you want to expand it, basically. So when we got this sell signal right here, right there on January 13th, I went fully short. I mean, I pretty much didn't have any buying power in my trading account, and they give me 4-1, so it was a heavy position. And as we came crashing down, all right, now we're coming into these support levels. Good support right there at 352 area. You can see that we held support there, and we got another reaction there. So we have at least 3 reactions. So we should get a bounce here, all right? So I started to lighten up that position and take profit into the weekend. All right, that only made sense for me. And if we rally, I'm going to reshort it into resistance. So, all right, so that's what I'm looking to do, and I'll keep you guys posted on that. But just use these levels on the way up. Where do we go to on this? You know, but I'm looking at the hourly. I see slight bullish divergence here on the RSI, not really there on the PPO. So I'm not exactly sure, but right there is a good spot. 369.43. See that? Resistance. We could even overshoot that slightly. And look, we could even go, let me go back to the daily. We could even rally. I don't think it's going to happen, but we could even rally back up to the trend line that was broken. All right, so keep that in mind. You know, I think it's important to build a position. So as we rally into these levels, 369 is right up here. I like that as a spot. And then probably if it goes all the way up there, I would add. All right, I wouldn't exit my shorts at this point. The only way I'm going to exit my shorts, because for one, I shorted the thing right here, January 4th. This is where I mentioned in my video, okay, guys, I'm short. I'm getting short. It was a starter short, and I've added to it, but you know, very, very profitable. So unless we can recover this trend line, and likely that's only going to happen if the Fed completely flips from cutting rates back to stimulus. All right, I'm sorry, from hiking rates back to stimulus. Okay, so that's that. And I just want to point out one other thing. And I've talked about this in the past, and it, you know, when you're in a bull market and it's just grinding higher, I think people think that will go on forever. So, and until I see signs of bearishness, I kind of lighten up on the bearish rhetoric. But in general, I realize that this market has been pumped by the Fed, and now they have inflation at 7%. So what are they going to do? All right, and what I want to point out, and this to show this, it's on the weekly chart. Someone was asking me, how long can a bear market last? And I want to just talk about that real quick, and then we'll get into some other charts. All right, so a lot of people that are alive today. Hey, bud, I'm in a video. All right, you go watch TV.
Dad, Mom said you're not in a meeting, and I really am hungry, and I want to go straight.
Okay, I'll be right up. Sorry about that. My kid needs a bowl of cereal. So a lot of people that are alive today are have never really, they've only been investing during the kind of the Fed pump. And so basically, if you roll out, the Fed really started stimulus back here in, you know, we had this this thing, but you know, Alan Greenspan was really the one to start cutting rates and really manipulating rates to pump the markets, because when the markets had weakness. So every single time the Federal Reserve has raised, you know, every time we've had a crash, the Fed stepped in here, dropped interest rates about 5 to 6%. Then we had the 2008 crash here. The Fed stepped in, dropped interest rates about 5%, and started doing QE. And then they basically were at zero. Only started raising rates right in here, but didn't get them up to 5%. Then we had the COVID crash. The Fed stepped in, dropped interest rates to zero, and did a ton of QE. Now we're all the way up here. We have 7% inflation, We have 0% interest rates, 7% inflation. All right, you see where this is going? You see how the the deterioration of the Fed's tools has, it's taken about 40 years or so, but they've used up all their tools, and now they're saying, okay, we're going to hike rates. Okay, so they're going to hike rates to try to get those interest rates back, but the markets are way up here. So if the markets start to crash, the Fed's not going to have the interest rates to use against it, and they're causing the crash. So, and we have 7% inflation. So the point is that the Fed might not be there this time, and if they are, then we're going to expect inflation to get a lot worse. And I don't know which way it's going to go, but bear markets typically can last a lot longer than you think. So if I go to the SPX, this is the S&P, kind of the S&P 500 going back many years. Here's the 1970s, all right, right there. And we had several bear markets, all right. This was a bear market, fell 23%. Then we rallied, and we had another move, which was even bigger. It fell 35%. Then we rallied even higher. You can see how the waves were getting bigger each time, and then we fell 47%. So you see that? See how the waves they were small, then they went higher, then the drop was bigger, then we went higher, then the drop was even bigger. Okay, so that was about a 10-year time frame. And at the end of the 10 years, by the time it started to rally again in the 1980s, you'd really gone nowhere. And inflation was running at inflation had wiped out about 40% of your purchasing power during that time frame. So that is, that's just something to take note of. And then if we go back even further and we look at like 1929, I think we can get data. It's pretty shallow data, but look, as I zoom in, I don't even know if you guys can see that, but right there, that's your 1929 crash, and it crashed here. We didn't get back to those highs. So if you were buying stocks right in the highs, we didn't get back there till 1954. So 25 years or so before you got back to those highs. So I know that bear markets, we're used to just seeing these quick little drops, and then we get back to the highs. I mean, even 2000. Look, if you bought tech stocks and stuff in the .com bubble, you didn't really get your money back. You barely got your break even if you just held out and didn't sell out. You got your money back in 07. And then, boom, you had another recession, all right? So if you were like, finally got my money back, now we can get some gains. Nope. So you didn't actually really start to get gains, and most likely you sold out and gave up on the market till about 2013. So that's 13 years, okay? Yeah, you got your money back, but you were basically just, so there's 13 years of not having gains. So again, I'm just trying to make a point of, recently, I know a lot of people, they're like, look, when it crashes, you buy and everything goes great. Yeah, that's because the Fed's been there to drop interest rates 5% each time, They've used all their bullets. So unless they're willing to let inflation run high, which I think they are, and that's why I think we're not going to have a complete crash. I think we're going to have bear market action where we grind lower and inflation will be running higher. All right, but look, if this is the top, and it's hard to say, but if it is, you might not get your money back for 20 years, all right? That's a possibility. That's all I want to point out. All right, let's get into some charts. And guys, I'm going to go pour my kid a bowl of cereal real quick, so I will be back in about 2 minutes, and then we'll get right into it. So just everybody kind of hang tough, and I'll be right back. Okay, sorry about that. Wait. All right, so let's get into some charts and we'll start looking at what happened this week, and then we're going to wrap up. I don't know if you guys believe me on that diatribe that I just went on, but that's kind of what I'm thinking, and you know, I have data to back it up. So, all right, triple Qs. All right, so here we go. Let me grab the right tool. All right, we closed at support, so it's right there at about 352.45. So I think we bounce here, and I showed those bounce levels. NQ, I want to show that. That's your futures, your NASDAQ futures. Again, we closed at support here. All right, so there's some support. We've had some reactions at that level. Now, so far, we've pretty much sliced through a lot of support levels, like the 200-day, just right through it, and even on the SPY, right through it. But we're at a support. I think it's probable we get a little bounce up to the 200-day. All right, that would make sense that we're going to at least retest the 200-day from below. And the Fed's coming out next week, so is the market going to just continue to crash with such huge events coming out? I don't think so. I think this is a message to the Fed saying you better ease off or we will crash really hard, and the Fed will take notice and they'll ease off. That's what I think is going to happen. So a rally up to the 200, and then we'll probably, you know, reshort this thing. All right, NASDAQ futures. All right, longer term, you look at the NASDAQ futures or the NASDAQ. This is your bull market in the NASDAQ. I think we're going to get back into that range, you know, and I could see us over time working our way down to this trend line, which is not too far, you know, if I have to expand it, but it's not too much farther down. So I think we rally up to the 200 and then roll down to there. We'll probably, you know, chop around here, but I think we're going to head down to the bottom of the channel. And this is where the Fed, if they wanted to save the market, they're probably going to do whatever they can right in that area. And that would still keep the bull market in the Qs. So the Qs has a long ways to fall. Let's just put it that way. If we're going to go into a bear market, we're not going to, you know, I think it's very likely that we're going to break down below these areas here if we're going to go into a bear market. All right. But that's bigger picture stuff. Here's the SPY. All right, so SPY, if you look at the weekly chart here, oh, I already showed that. We have a weekly sell signal. We're through the 200-day moving average. We've got, you know, my target for the SPY, I think we're heading down here, 339. This is kind of where the market was at before COVID. So I think the Fed's willing to let the market get down to the levels that it was at before it created all the stimulus. So, yeah, I think that's where the market's heading, at least in the short term. And if we're going to enter a bear market, this would be an area where you're likely going to see a substantial bear market rally, okay? And then maybe we go down through it. But I don't know what's going to happen down there. But, again, that's where I think we're heading. It's not going to crash straight down, though. We're going to get little bounce, zigs, and zags. So I'm looking for a small bounce right here on Monday, or at least into the Fed. Maybe after the Fed, the bounce comes. And then we're going to reshort into that bounce if we get it. All right. What else do you guys want me to look at? There's a couple. I can go through some of the trade ideas. Netflix. Yeah, well, let's look at that. So Netflix collapsed. Again, this is how the downside works. It traps the longs. And I talk about this a lot. Everybody, I get trolled all the time when the market's going up. And it's funny, last week I didn't get one troll remark, not one. Didn't even hear anything. I didn't get comments on anything saying, oh, I'm a clown, market's going up forever. I didn't hear any of that. It's kind of funny. They'll show up again when the market starts to rally. That's just how they work. But the way the upside works is everyone says, oh, the trend's your friend, no reason to get out. This is a pullback by the dip. That's what everybody thinks. And then boom, gap down, and it traps the money. All right. The downside oftentimes doesn't give the bulls a clean exit. All right, it doesn't give them an opportunity, and that's why they sell. Nobody rings a bell at the top. Doesn't give you a thing saying, okay, the trend's broken, time to get out. Go ahead and take your money. Have a night. Hope you enjoyed your ride. Not everybody gets to do that. So the smart money gets out before this shows up, and the dumb money sells sells down here. And if we start to sell down, that'll be the dumb money panic selling. This one is at some support. Netflix is at some support. You can see right here, I marked it out. That was kind of your former resistance, 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 resistance. And we're right there at support. So I could see us bouncing here. Looking at the hourly chart, no divergences because of how this thing collapsed. So I don't know. I could see us bouncing here. I could also see us, like rally up a little and then come down and make a slightly lower low and get put in a bullish divergence and then rally. I don't know. It depends on what the market's going to do. But yeah, I could see us rallying here. I think it's probably worth a long at this spot, but you might want to wait till after the Fed or something like that. We could grind around here for a few days before the Fed. And then the trade would probably be a trade to work itself into the gap. I don't think we'll gap fill, to be honest. I wouldn't wait for it. So if you are going to take this thing long, again, be careful because the market, I've got sell signals on the general market. So you are going a little bit against the current, but it could rally and into the gap. And I wouldn't wait for the gap to fill. I'd just get out and take your profit if you did get that rally. No divergences though. So for me, it's not the setup that I normally look for. It would be just a bounce trade, and it's just not the clean kind of trend setup that I look for. But that might show up here in the near future. So we'll keep an eye on that. All right, guys. Russell. Yeah, let's look at that. So I'm short the Russell. I did take a little bit of profit on that just because I think we're going to get a bounce, but I still have a sizable short position on IWM. And on the daily chart, I think we're heading right here. This is about 169.88. So again, that's the level right before the Fed. That's before COVID, right? This is the area where, the Fed was doing all their manipulation, but I think the Fed's like, oh, we did too much. We need to take it off. And so we're going to take off kind of that amount. So that's the area right there. It's about 169.88, 170. That's where I think we're heading, and that's what I'm holding out for. So any opportunity, any bounces on this one, I'm not even going to cover, I'm not going to cover my entire short unless I see something show up in the charts or the Fed does some sort of 180. I think we're going to, I don't know. We're probably going to head down to this 193, bounce there, maybe up to this 205, and then head straight down to this 170, if I had to guess. I don't know how we'll get there, but I have a good, I think there's good probability we get down there. Okay. And well, you've been listening to me for over a year, but you wish you took my advice. Well, for one thing, I don't give advice. I just give my opinion. But no, I don't think it's too late. I'm trying to outline how I think things are going to go and where the entry points might be. So there might be opportunities to enter. Again, I wouldn't want to not be short here, at least something, because in my opinion, the market might not give you a nice clean entry. It likes to do that. If you're not short if you're not short when you should be short, like when it's rallying and everybody's bullish, but then the technicals are setting up to say, hey, time to get short. Like this false breakout right here. That was a clear sign in this IWM because we had negative divergence and we had a breakout and it failed. All right. So once you notice that failure, that's a sign. All right. And so that would have been an opportunity to short. And I have it circled saying, okay, you could short here. If you shorted here, look at the position entry you got. And you got it when everybody else was bullish. And that's when you want to be short. You want to be short when everyone's bullish. You don't want to be short when everyone wants to short. Right now, everyone wants to short. All right. So that's why I think we probably get a bounce, maybe a little downside, and then a pretty substantial bounce. But now everybody wants to short, all right? So You don't want to short when everybody wants to short, because the thing is that sets up the short covering rallies, which are the bear market rallies. Short rally heaven, yeah. Yeah, I mean, everybody's long. You know, the short traders are always the minority, all right? That's just how it works. That's why the downside happens so fast, because there's nobody short, so there's nobody to cover, all right? It's just longs waiting to panic. And that's, you know, this channel, I've been trying to point that out for a while, but, you know, it's just the reality of shorting. Most people don't listen, and then they wish they shorted. It's just how it is. Net. All right, so let's get into some individual charts. Just point out some ideas. No, I don't think net's done. All right, net's got a ways to go. In just my opinion, I think there's my target on net, 61.48. Obviously, could go a lot lower. I mean, you look at stocks like Peloton, and they've pretty much unwinded their entire pump. But yeah, net right there. All right, now we're at some support right here and now. This is kind of a support zone. There is some support right here at 86.88. So if we undercut and we start to break that level, I think we're probably going to get a little bounce here. We could even bounce all the way up to here. I don't know about a bounce up to there, though, 110.50, because we already had that reaction right there. Ran up to the 200-day. See that? It breaks the 200-day, and this is what I think the SPY is going to do, and the Qs. Breaks the 200-day, then it runs up back to us, then it rolls over. All right? But that's what this one did. Maybe a little bounce here. But watch this level, all right? 87, it's about 87, all right? You start to see impulsive breakdowns of that level. You take a position there and trade it down to 61.60 is where I would look at probably taking profit on that. I hope you're short on it and not long, but, you know, another 30% down. Look at Peloton. I know this one had bad news. And it's funny because just when the news, you think it's bad, it gets worse. That's kind of how the downside can really work. So here's the Peloton pump. Again, this is just momentum trading, basically. Now, I didn't ride this thing all the way down. I wish I did, but, you know, I didn't. But I got short. If you go back and look at my video back on December, I think it's on December 22nd or December 23rd. This is the area where I was like, yeah, that looks like the perfect short entry. And at the time, it looked really good as a short entry. Of course, all the trolls came out. They were clowning on me because the stock was up like 10% that day, and that's when I was shorting it. But, you know, and again, I don't want to short when things are crashing. I want to short when things are rallying into major resistance with technical setups for the short. And, you know, basically the top of that one, wish I wrote it down, but I didn't. Now I don't want to short it. You know, I obviously don't want to short that thing down there. And in fact, I'd be more bullish. See the bullish divergence? I've already got it marked out. And so the smart money is buying this thing basically. Now I don't want to buy it because my setup comes on a break of the downtrend line. I want to see a breakdown. But the smart money, you know, the momentum is moving higher. So, you know, this downtrend line here is what I'd be watching, a break of that. All right, I would be bullish on this one now. I know the news is bombed out, but the selling, it's all sold out. All right, the sellers are, you know, they're gone most likely. So this is where I'd want to be buying it. But, you know, I mean, for a trade, I need to see that buy signal. I wouldn't invest in this thing, but for a trade. And then, yeah, you've got resistance right there at 36.93. So you could break above here and trade it up to there. You know, not a very big move, but that's about a 15% gain. So there might be a trade there, just a quick little hit and run. A break above that that'd be bullish. A break above that 37 area, and we might be starting the next trend trade higher. And the target, if you see those signs set up, is like about up here on this gap. All right, this might take years to do though. All right, so just keep that in mind. You know, this might take many years. Like KHC, you know, that one, you had this big gap down, just like that. See that big gap down? And then it just was in, you know, bear market for many years. All right, so that might be what happens for Peloton. It might not fill that gap. KHC still hasn't filled that gap. All right, and that was back in 2019, so a couple of years. All right, I'm going to scroll down. Guys, leave me a thumbs up if you can. I do appreciate that. And we'll start looking at some of your comments. PayPal. I'm just going through these. All right, so there's my target. I've got it already marked out, and there's the gap to fill. I've had this gap. That's where I think it goes. PayPal. It's pretty obvious now, right? I mean, look, it's just pointed straight down. What we're going to have little bounces. I don't think it's going to get straight there. It could, you know, but I wouldn't want to be long this thing. All right, so I think we're heading down to 130 on PayPal. And yeah, that's all I see on that one. All right, let's see here. Netflix. Yeah, I went through that one. Oh, crypto. Well, we can look at crypto. Crypto is part of the bubble, in my opinion. I've just never really believed it. And crypto rallies when it's just free and easy money and it's a mania, you know. And I hear about it, you know, I hear about crypto from everybody and they're all buying. I've got other things that people have bought, like I hear about Student Coin and some of these coins, and they're pump and dump schemes. They just pump up and everybody's mania frothing at the mouth bullish when it's rallying. And now I look at like Student Coin, it's back down to zero basically. So they lost everything. And Bitcoin, you know, Bitcoin's got a little more mainstream stay. But I'm just not a believer in the coin and what it is. You know, when I see products priced in Bitcoin, then I'll believe it. But right now, people just buy it and when it goes up. Bitcoin's breaking support in this big Bitcoin futures, but 42.33.5. It just broke support on this big move down. And, you know, yeah, they're kind of rallying it a little bit, but it's just in no man's land right now. It's just got nothing underneath it. So we're going lower, in my opinion. 30,000, 31,000 is the next level of support right here. The buyers should step in there. You'll likely see a reaction. All right. So maybe you hit that 31 and then pump up to about 36, 37. But I think ultimately we're heading lower down to 24,830. There's a little gap right there. Not a lot of gaps on crypto, but because it trades like 24/7 or maybe it's down for 1 hour. The futures are. There's a gap to fill at 25. It's about 24,900. Yeah, so that's my near-term analysis. You know, it's probably hit that level, bounce, and then come down to this 24,000, 25,000. There's your negative divergence right there. I've got it marked out. So that was your divergent high. That's your indication. Okay, likely about to reverse trend. And you have. All right. All right. I'm just trying to scan through some of these. Some people asking about my personal life and stuff. I don't get into my personal life on YouTube, guys. Just not really any place for it. This channel is about making money, and I'm trying to help you guys do that. That's about it. You know, that's all you really need to know about me. Baba, all right. Yeah, I saw that move on Baba on Friday. So here's what I got on Baba. I'm not in this position right now. I don't have, the only long positions that I have right now is gold mining stocks. And I'll go into those. I really do like those. They haven't quite made the move yet. But again, I want to get you guys positioned and get myself positioned before the move happens. That's, you know, that's kind of the general theme here. Baba's pulling back to support. We still have bullish divergence. I mean, we had it. So I think you're probably going to get a buying opportunity at support, right? So that's how I would treat it. Any kind of tags of this trend line, you can add or build a position. Maybe I'll take a position on it, you know. We'll see. But there's bullish divergence. All right, we broke out from that trend line. We're pulling back to support, and maybe we chop here and then we go. Could go sideways and then go. As long as it doesn't break back down and close back in this area, if you break back in here and you get a daily close down here, then I'd probably stop out. But again, that's the strategy that I teach, is to enter right here. You know, if you can get it down in here and you stop out here, we're talking about small losses. You know, maybe a 2% loss, and the profit target is up here at 160, 165. So let's say we have a 2 to 5% loss. You know, let's just say we give it. You know, if you enter here, I wouldn't go 5%. I would probably, you know, 3%. Let's say a 3% loss. All right, so you get a close down in here, you stop out, you have a 3% loss. If you take it here and it holds support and it rallies up to our profit target, we have a 33% gain. All right, that's a 1 in 10 risk reward ratio basically, and that's what you want to be taking those trades all day long. All right, you take the trades where the risk reward ratio is in your favor, and if you're right, you win big. All right, you're not going to be right 100% of the time. So you want to take the trades that when you're right, you win big. All right, I teach that in my course. That's risk reward ratio analysis. I teach that. I don't go through a lot of that on the channel, but I do teach that in the course. So every trade that you're analyzing, you should really analyze it with that kind of a mindset. What's my risk reward ratio? In my course, I have a checklist that has about, I don't know, 10 steps of things to, check off the checklist to make sure you've got a high probability trade. All right, let's keep moving on. Yeah, Tesla is interesting because you're right, it hasn't popped, at least, and I've looked and I see that, and I'm like, so I'm short GME. I'm short, like, I saw the GME. I saw how the market, all the mania stocks were just losing steam and just crashing, and the GME hadn't crashed yet. So I'm like, okay, let's short this one. The setup's good. Here's the technical setup to look for, and so far that's working out nicely. And so we can do that on Tesla. Tesla hasn't really crashed either. So Tesla, you can remember, let's see, here's your COVID drop here. So Tesla, if the Tesla's going to get down to that pre-COVID area, there you go, 188. That's way down there. I mean, this thing could be a bloodbath. So this is the trend line that I got, all right? It's right here. I've got all the support lines marked out, and we're right there, all right? We break that. I think that's your sell signal on Tesla. The one thing we didn't get on Tesla on the daily chart was negative divergence. I have a downward momentum marked out, but look, we also have downward price action. We're just making lower highs, there. Actually, let me double check. Yeah, no negative divergence really on slight negative divergence on the PPO, but it's just wasn't super clean. You don't have to have it though, and in the market, in the condition that it's in, it's a wounded market, so I would be looking for these high flyers to come down. This one, yeah, it closed below the trend line, but just right at the end of the day, let's look at the hourly. Yeah, the last couple hours started to break. I need a little more proof on this. So if we gap down, let's say we gap down on Monday. If this is going to gap down, it's probably going to get down to 1910, and that's probably where they'll rally it, I would think. But watch that level, not 1910, 910. If they gap down to here and then they rally that thing, I'd short that thing right up in here for sure, because that's a break of trend, and maybe they rally into resistance. That's a clean entry if you can get it. If they gap and crap, which means they gap down and then the just panic selling, I just shorted on the break of that night, that level right there. So those are two levels I'd be interested in shorting it. Anywhere in between there, probably not interested in shorting it. All right. And then if they rally, and then another option is they just rally on Monday. And if they rally on Monday, then, we just wait for the break of this trend line. All right. We're just waiting for that. Whenever that comes, that's going to likely be our short. Let's say this rallies. What would be the best, in my opinion, is it rallies all the way up here, makes an all-time new high, right into resistance. Everybody's frothing at the mouth bullish in Tesla. and we're shorting it right up there, getting just a great position. From there, it probably comes down to here, chops around, breaks, and then just completely crashes, and you'd have an excellent entry. One way I'd probably do it is take a starter short up here, and then as it came down and it broke, add to the short, and then I just ride this thing all the way down into the hole. All right, guys, that's Tesla. C. So is that SE? Yeah. Crashville. Basically, this is a wheelbarrow and dumpster fire. So this one, let's see if we can find any kind of. I don't have this one really charted out. All right, so you've got, look, everything's broken. I can't make any kind of bullish trend here that would put this in non-bullish territory. Let's go with that. All right, we've got 3 reactions. 1, 2, 3. All right, so that at least gives us a trend line. Oh, and we have this gap down right here. So that's another reaction, gapping below the trend line. Okay, again, the bulls are like, oh, we're at support, buy it. Good, 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 where everything's good. You know, no reason to get out. Gap down, what the heck? You know, so that's what happened. So bearish, all right, in this one. And not, you know, there's not a ton of support. There will be, there's little levels of support where we've had minor reactions, but this thing's just been a rocket ship. Yeah, maybe we're at support right there. I mean, there was a little reaction right there. You know, we held resistance, kind of popped it, but it failed. Held support, support, support. We're probably at what I would say is some support. So maybe we bounce here. Any kind of bounces in this, I'd look to sell the rip into resistance. That's basically it. Where does it rally to? You go to the hourly and you could probably spot a level. You know, maybe we bounce up to the trend line. We haven't tagged that trend line from below yet. You get that, that's a perfect entry, and I'd short it. Or just, you know, right up in here. Look at that. This is the hourly chart, but there, right at there. I'd probably short it right there. 206. Okay, moving on. Guys, thanks for joining. No crash if I'm buying stocks. Yeah. Well, I'm short, guys, still. I mean, in many things. Covered a couple of shorts on Friday, but doesn't mean I'm looking to not re-enter. I'm looking to re-enter. All right. Slope of hope. That's what it is. All right. That's my mantra right now is slope of hope. We have major breaks of major support lines, major bull market trend lines, all kinds of sell signals across the board in general markets. So we're going to ride the slope of hope until that changes, which means as we rally, we short into that. All right. That's a sell the rip. It's not buy the dip. It's sell the rip. What am I on? NVIDIA. All right, there. This is the support line I have in NVIDIA, the bull market support line. We're basically at that support. I think we bounce here. All right, and then we're gonna, you know, and then we'll probably break this major trend line. But until we do, you know, it's getting into support. So I'm not short this. This is one of the ones I covered on Friday. It could go a little bit lower, but maybe it runs down and tags the 200-day and then rallies back up. I need to see definitive proof that this trend line in this area of support is going to break before I'm interested in reshorting it. All right, that's it on that one. And if we rally, maybe we're probably going to rally up into this range, 267.35 or so. What's Vertex? Well, you got to give me the symbol. I don't know that one. Is Vertex a real estate thing? I don't know what this one is. A banking stock. This is a penny stock. I'm not interested in that one. I don't even know what's going on there. Low volume, low liquidity. I don't know. Negative divergence. I'd get out of it. Look, you're starting to build that negative divergence. It's starting to show it. There it is in the RSI. All right. And this is going to plunge if it does, and it's a penny stock. All right, I got to move on from that one. yeah, we can look at the large caps real quick. I'll just do a quick scan. Big things happen. All right, look at this Amazon breakdown, guys. I'm going to go to the weekly chart just so I can state the significance of what just happened this week. All right, here's your 2008 lows on Amazon. Support, support, break. All right, sell signal. That's a major sell signal. You haven't had a sell signal like this for over a decade. All right, and there you go. So that's what I'm saying. I think we're at the top of the market. I think we've started a bear market, and down at the bottom after it's a bear market, the headlines will be like, "Oh, we're in a bear market. We're crashing. Everything. Why? But it's too late by the time you watch that stuff. Now we could rally. We definitely are probably due for a rally, but yeah, bear market in this one. Look, we could rally up to 2933, probably get rejected up there. Yeah, guys. So heading down to 2000, about 2000 is what I see on that one. And then going to Google, go back to the daily, broke support. There it is. All right. Support, and then it broke on Friday. Sell signal on Google, heading lower. Apple's broke support. It broke it a couple days ago, heading lower. Microsoft broke support. I've kind of talked about this one. And if anybody's asking about Microsoft, most likely they're long because, again, this is a crowded trade. Everybody's long Microsoft. So don't put it past this thing selling off 30, 35, 40%, whatever. You look at the corrections in Microsoft when they really come. And, even like look at this little one right here. It doesn't seem like much, but it's a drop of, that's 20%. COVID obviously was more, so we're down from the high. Well, here's the all-time high. We're down 15%, so maybe another 5% if we're just a correction. But here's the thing. This is coming after COVID lows, and you got some kind of support in here, and then we've broken. Plus, we got major sell signals in some of these other fangs. So this is not just a correction, in my opinion. This is likely the top of the market. I think we've started a bear market. I really do. Could be wrong, but 200-day, probably going to get a reaction. I can't see people not wanting to buy Microsoft at the first tag of the 200-day in over a year. All right, it just makes sense that they're going to at least try to buy it for a rally. So, but if we don't and it just slices right through, then again, for me, it's sell the rip. All right, so if we hit the 200 and we rally, I'm going to short into the rip. If we break below the 200-day, we're probably going to hit this level, 284, and then rally into the 200-day. It's sell the rip. All right, because ultimately, I think we had much lower. And the technicals back me up, all right? I'm not just saying this for whatever reason. Look at the negative divergence that was right there. I had it right there, divergent high. I'm saying, okay, we're likely going to reverse trend soon. I don't know when, but we'll wait for break of trends. We have the divergence. We have the reversal in trend. We have the break of trends. Everything that I've talked about that was likely to happen has happened. So I'm not making this up. There's proof. Another thing about this market, guys, you have to realize is that this was a foaming at the mouth retail bullish market. So the Fed pumped all this money and gave everyone money. Everyone's sitting at home buying stocks and getting rich and seeing all their things go up like crazy. That has to unwind, and that hasn't unwound. Okay, all those people are still in this now. They're still foaming at the mouth, so all that's going to get unwound. Here's an example, GME. I had a friend of mine who talked about GME pumped some news, all right, and this looked like an obvious pump to me, but right here they said, oh, we're going to get into NFTs. And I was like, that's hilarious. You're a bubble meme stock riding another bubble, trying to keep your bubble up. It's just all speculative. And so it gapped up 25%. And I was short GME. But I re-shorted that thing. I added to that short on that. And that was a 25% gap up. Sure enough, sold into it. And I had a friend say, oh, GMA's going at it again. You know, here we go. Like, this is the retail trade. You know, they chase price. So when the price is up, they get bullish. When the price is down, you don't hear from them, basically. But, and, you know, sure enough, this thing's just collapsed. So we're down in this thin zone right here. And when you enter a thin zone, you usually flush right through it. So I'm looking, you know, again, I don't 45, 46. I don't see any kind of support till we get down there. Then we'll probably get some sort of raging rally. At the end of the day, high probability that this thing completely unwinds all the way back down into, you know, this area. I wouldn't ride it all the way down, but I'm definitely interested in taking this thing short, even beyond this 45 level, even though I'll probably take some profit down there. Because I stepped in early, if you guys don't remember. I was like, look, I think it's going to break. So I stepped in and shorted it. I don't know. Maybe I shorted it right in here, January 5th. So far, we're profitable by about 20%. But when it's all said and done, 65% at that level and probably lower. Guys, ADA crypto, that's probably what Cardano. Look, all that crap's going to unwind. All right, that's just my general opinion. I covered Tesla already. Go back and watch the video. All right, so look, this is the semiconductors, SOXX. We're at some support here, all right, but a couple things about this. So we've got this, you know, we've got this bearish rising wedge. This is a bearish rising wedge, all right? These patterns typically resolve to the downside. This bearish rising wedge did have negative divergence right here, but then what happened? They ramped it all the way to the upside. Okay, that happens sometimes. And so now this ramp, though, big negative divergence. So it told me that, all right, this is a fake out move. And sure enough, boom, right down to the bottom of the wedge. We're probably going to get a minor bounce here, and then boom, we're going to break. That's what I think is going to happen. So we'll watch for that. Maybe we even bounce up to the top, but I doubt it. I don't think we're going to bounce all the way up here. I think we get about a halfway bounce and then we break. If we don't get that bounce, we could just break. But at the end of the day, the end result that I would anticipate is a break. All right. So whether you want to game a bounce or whatever. All right, I'm going to just go for a little bit longer and then I got to get going. Intel. Guys, hit that thumbs up button while we're, you know, just about to wrap up. Leave me a thumbs up. And if you're new, check out the course. I know I talk about that a lot, but I think it does help, you know. If you haven't taken it, it will help you. I guarantee that, because it's like learning from a teacher, you know, and these are lessons that you can apply to actually make you money. So take that course, link in the description below, and link in just look at one of my videos, you'll see the link. It will help you spot trades in advance, and it helps you manage your trades too. As trades are moving up into resistance, you'll be able to spot those levels. You'll be able to know what to do, and you don't have to wait for a video after something's crashed for me to say, yeah, it did what I thought it was going to do. Intel, all right, Intel on the weekly chart though. When I look at the weekly, here's your 2009 lows. Here's your bull market, all right, in Intel, and we broke once, it recovered, we've broken again. I think we've started a bear market in this thing. Now, yeah, we rallied, they're trying to hold it, you know, they broke it, they rallied it. Unless it gets back above there, bear market, that's what I would say. So look, it broke, they rallied it, they're right into resistance. You know, no real negative divergence on the weekly, but again, weeklies aren't where I look for the negative divergence for, you know, I go to the daily, but there it is right there in the resistance. All right, I think we've just started the downtrend. All right, so likely going to head down to this level, 43.62, probably pretty quickly, get a bounce there and keep going lower. I don't know where. how low, but all right, that's what I have on Intel. So those are levels to watch. You know, if you look at the daily, look, we traded right to resistance. That was your short, right up in there. That major resistance. Down she goes. Yeah. All right, maybe miter support. You might get a little reaction right here. It looks like they're doing, it's going to most likely slice right through. But maybe you come down a little that and then break. But all right, you don't have major support till about 43, 65, 75, somewhere right in there. Spot got murdered out on Friday. At some support. I don't know. It's kind of tricky to say. It could be here, could be there. If I mark it here, I've only got 1, 2. So that's not good enough really in my book to say, okay, this is support. If I mark it here, I've got 1, 2, maybe a false breakdown, and then a gap down. I almost kind of like that one better. There's a gap. Look, you just filled this gap right here and undercut it a little bit. You've also got some support down here at 177, about 177.90. I don't know on this one, to be honest, but we could bounce here, or we could come down to this 177.90, probably bounce there. Asana. Look, I talked about this in a live stream saying I think it's going lower. That's a target, 42. Decent support down there, so probably going to head down there and bounce. Bullish divergence. If it goes any lower soon, then we're going to get right down there and take out the divergence. So I don't know. But I think we're ultimately heading down there, 42. Space. I mean, Space is a speculative name. I think it's already been murdered out. I mean, look. Yeah, it's pretty much unwound. This is the mania stuff. Look, you're below like even the IPO. It's just nothing but losses in this one. This one could go bankrupt. I mean, who knows? I wouldn't touch this one. I don't see a trade here. I don't see a divergences. Look, bearish momentum, bearish price action below. I wouldn't touch this one. And again, don't expect this to just rally and rip higher. That was back in the mania times, all right? That's back when the money pumping and the mania times. We're just starting to enter risk off, major risk off. So these things could go bankrupt, all right? If you're still in it, you probably lost all your money. So I don't, obviously you're just locked in and you're a long-term investor now. But just realize this could go bankrupt. I think oil just broke. I think oil is going lower. Someone asked me about XOM, guys, and I see CVX. I'm interested in shorting oil. Look, here's drip starting to rally, but here's the oil futures. Now, oil's been very strong, all right? So longer term, I like oil. Oil's not going bankrupt, all right? But you look at the hourly chart on the oil futures, and look, there's kind of this leg up, support, support, sell signal. All right, rally, and all right, I think we're downtrending. All right, and so that should impact the oil stocks, and we're probably, I don't know where we're heading, possibly down here to 65 or 75. These are levels of support, so 66, 80, and 75. And look, if we start to turn down now on this daily chart, we will have this negative divergence basically. Just slightly, just barely, but we'll start to get it. So that's what I think is going to happen. Oil's had a good run. You know, if you're long it, I think it makes sense to take some profit with the chart set up, and we'd have a sell signal now. So buy it down at support. You know, if we get down here, you could buy it, but we're probably going to go hit the 200. And, you know, these are levels to watch for support. The Fed's trying to put pressure on oil, you know, and so is you know, everybody wants oil to come down that doesn't like inflation, which is the government and the Fed. Although they like inflation because they inflates away their debt. I think they need inflation. They just don't need it to happen all at once really quickly. Ford, guys, I covered Ford, but I'll do a quick look at. We're at support. There was your trade. All right, we shorted it right up here. 15% drop or so. I covered that one on Friday. All right, I covered the short trade on Friday. Now, yeah, it's slightly below that support, but just barely. All right, I need to see a definitive break for another sell signal. So what I'm looking for is that next sell signal. So if we rally, that's fine. I'm not going to short this thing until it breaks this trend line now. I need a nice definitive break. We might get that on Monday. Maybe it gaps down and then rallies up into resistance. I'll short it right there. Any kind of definitive break of this trend line is where I want to short it. And I'll short it down to the 200-day, 1650. They'll probably come in together. Okay, that would be your next area of major support. And that would be a drop of about another 20%. That's what I'm looking for. That's what I'm expecting. But we could bounce here. Could rally here a little bit. All right. Guys, leave me a thumbs up. I appreciate that if you haven't done that. And I'm going to do one more and then I got to get going. I've been going for an hour and 15 minutes now. Lots of stuff to look at. I know it's hard to stop, but commodity soybeans looks bullish, guys. Slight bearish divergence, though. I don't know. We might pull back to this trend line right here. See that negative divergence right there and there? Divergent high. We could pull back to here. I'd want to buy it on the trend line support. Until I see that break, I'd be a buyer down there. No. Someone says a bear market is something you go 10 to 20 years long in. What happens is it unwinds. It doesn't take 10 to 20 years to unwind. It unwinds in maybe a year or, you know, a year and a half or so. But it falls the slope of hope. So what happens is, you know, if it drops and then people get, or it gaps down, people get, they get complacent. They don't want to sell into losses. They're, oh, I just lost 10%. It'll come back. Because they've had this buy the dip mentality for so long. So then it rallies from there and they're like, okay, it's starting to come back. Then it drops swiftly again and it locks them in. And they're like, now I can't sell. I didn't want to sell 10% down. I can't sell 20% down. Then it rallies and it continues to ratchet down. Then towards the end, it just plunges. And so they'll sell down there, most people, and they'll just take losses, you know, big losses. But some people, what happens to retail traders a lot of the time is when everything's bullish, they've got diamond hands and they're not going to sell. And then when things collapse, they become long-term investors. Well, I'm in it for the long run. You guys all know how it goes. I'm in it for the long run. And, you know, they start talking fundamentals. It's no longer about technicals or I think this thing's going to be the wave of the future and this and that. And it's all just make-believe. But it's just, they're in denial. That's the denial phase. You know, you look at a bubble and you look at the bubble chart and the denial phase is when it's like doing that basically. All right. Yeah, fundamentally, sound stocks might outperform Shebev. Like the FANG stocks, Apple and stuff, they're strong. They got good earnings. But the baby gets thrown out with the bathwater. In bear markets, look at Amazon. Amazon crashed major in the dot-com bust. And it was a relatively strong company, but it crashed. So the baby gets thrown out the bathwater. It might outperform, but it might outperform to the downside. So maybe not crash as much. And guys, I don't want to say crash because again, I don't think we're going to crash. I think if we're going to do a bear market, I really think it's going to be a managed bear market where we kind of roll down, and it'll be like that for at least 6, 7, 8 months. There will be rallies, strong rallies within that within that downtrend. And then we start to crash towards the end. All right, bear markets end in crashing action. They don't begin. Gold miners, I didn't cover gold, so let's do that real quick. Guys, look, gold was strong last week. You look at this weekly chart, the markets are crashing, and gold, as I zoom in, had an up week. The weekly chart still closed at this kind of resistance level that it loves on the weekly, but the week was up. All right, the former week was here, and the price action on the week was up. All right, so that's something to take note of. The other thing on the daily chart is, on the daily chart, we've been tagging this 1830 as resistance. We had one false breakout, and we've had false breakdowns too. It's been very whippy, so there's nothing to say that this isn't another false breakout. I completely understand that. But we broke out, and we're kind of back testing, and so far you can see we closed pretty much right on it or above it, whatever you want to say, but right at that key level. So, and then if I go to the hourly chart, looks like it's bull flagging. All right, we got a flagpole. All right, we got this kind of flagging action. So I think the Fed is going. That's why I think the Fed is going to come out a little more dovish, trying to walk the markets down nice and easy, which means they need to come out a little dovish right now because the markets are like starting to crash, and they're going to come out dovish. That's going to be bullish for gold, and we're going to get that next leg higher on this price action. That should set us up for a break at least to this resistance line right here at about 1855, but probably higher. All right, probably breaking out. All right, probably breaking out above it. All right, so watch for that. All right, and if we get that breakout, then I think it's off to the races on gold. All right, making new highs. All right, so I'm long a lot of these gold miners. I've got a pretty sizable position. Until I see something different, I'm going to stick with it. Oh, and then another thing, like, look at Newmont. This is kind of a look. All right, clearly bullish price action in Newmont. And this is the largest gold miner, so just a good proxy for, the gold miners in general. But look, we've got resistance all through here at this 59 area. We also were building bullish divergence. See this big bullish divergence that's been building? All right, so that tells me that this is about to reverse trend, and the trend has been down. All right, we've been kind of downtrending. Here's a big downtrend here. All right, bullish divergence started to build. Tells me we're going to reverse trend. Now we already have reverse trend because clearly we're making higher lows and higher highs. Okay, so bigger trend has been reversed, it's up. And then if you look at the hourly chart, look, I mean, to me, that looks like a bull flag. Look, a flagpole, flag action here. I think we break to the upside next week, probably after the Fed. Maybe even, they might even front run the Fed. I don't know. And I think we're heading up here, 68.66. And we get up in this area, it's pretty obvious that we're probably going to pop the highs and make a new run. So I don't know. In general, I just see bullish signs in the miners. Now, again, I don't, I was buying these Newmont I was buying down here, but some of these miners are still in good positions. Barrick Gold's kind of started to run, but some of these, we had a huge week this week in the miners. So, and they gave back a little into the close, but look, still holding on to nice solid gains. This thing was up 15% with a little pullback. That's bull flagging action. All right, flagpole, flag, break higher. That's what I think, guys. So guys, I'm going to wrap up here. Thanks for joining the live stream. Check out my course. Leave me a thumbs up on the way out. I'll see you guys on Monday. Bye.